The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the author of the Opening Call Daily Newsletter. Okay, what we're looking at here is, you remember I was going through this the other day. We'll do it again right now because it's still very pertinent. Let me go to my charts right here and show you some of the things. Yes, the IWM. Actually, this one has very little resistance until it gets to the 158, 159 area. It's a 157.47, 157.69 in the 10-minute chart, and it's at 157.47 in the IWM, and then a bunch right here in the 120-minute chart. But it was really this that I was looking at. In the Dow, based on the Chapman Wave automated resistance levels, look at the plethora of resistance levels that it actually got stuck in the 26,800 area, 26,900, and then it popped to 27,000 right there, 300s, and 27,060 was the next one. 27,461 follows after that. So this says to me, be a little careful here, because on a short-term basis, you've got overhead resistance in the Dow. The S&P, same thing. S&P not quite as much, but it's still a lot. It's 4, the Dow at 5, and then an extra one up top in the 27,400s. So look what happens here in the daily. All the way to 3,010. We've actually gone above that. We went to 3,020. Now we've gone below. So we're at 29.98 at this point, up 43 cents. Look at the weekly chart, way up in the 30.80, 30.99, 31.30, 31.32. Wow, we break out at some point in the next couple of months. There's going to be a beautiful rally. And then you get a lot of resistance in the monthly chart at 29.63, 29.82, and we're above that. So 31.84 is the really big one in the S&P. So let's go one step at a time. You see there are also very few resistance levels, except the 121 has 120-minute chart is 29.80. So if I'm looking at this, I'm saying, okay, upside resistance doesn't mean to say there's a vortex to the downside. You can just black hole right through. No, it says choppy sideways move until some energy is rebuilt. Go to the QQQ, the NDX 100 trading vehicle, and you'll see we've got umpteen, 1, 2, 3, 4, 5, all the way to 197. We're at 191, but it's the 191, 90, 192, 80 area, 194. A lot of resistance levels in the daily, and 193 and 194 in the 120-minute chart. But yeah, you've got quite a bit of support. You've got 191.08. and 190.05, and we were at 191.79 with a low this morning, I think, of 191, somewhere around 29. So there you are. Now let's go to the, I'd like to go just to the SMHs. Had a nice report sent to me from one of the bulletins that gets sent out on the updates on the semiconductors, saying slowly they start to see an increase in billing, finally. So yes, the SMHs were signaling that that would happen. Usually it's no more than 6 months. This time it's 8 or 9 months that it's already waiting to see the change. But the price of their semiconductor almost at an all-time high just the other day, was within a point or so of it, and trading right now at 121.02, down just 7 cents. And that has all the way to 122, all the way from 120s to the 122.76 area, and then the weekly is 124. So we'll watch this see. Just, I think, it's a digestive phase that we needed to see. Okay, now what I'd like to do is to go just as time permits. I'm going to go to the gold contract. Gold is up $1.02 at 15.12. So if GDX, which is the most practical for those of you who don't do the futures, the GDX is really the next best thing, up 63 cents at 27.92. Had a lousy day yesterday considering what's going on. Nice move up today. Then it pulls back, hits the 14-period moving average, which has been resistance now for about 5 or 6 sessions. And now it's pulling back. It's on the 9-period, the pink 9-period exponential moving average. I would say to you that this is a well-deserved rest. That's what I'm saying. The monthly chart suggests at some point we will go high towards the 30.50, 31.80 area. 31.87 is the 200-period moving average, the orange 200-period moving average in the monthly chart. It just needs to digest. I mean, let's face it, going from 20 to 33% gain, it just needs a bit of a pullback at time, maybe more than price. We'll see. But if the GDX takes out 25.50, 25.20 key support, 2 points down from here, I would suggest to you that it's going to be deeper than just a short-term timeout. So that's the way I'm looking at it. Next time it breaks into the 29.60 area, that is really good action. It might take a little to do that. Okay, that's that. I want to show you silver. Silver right now is up 0.03 at 18.06. Same kind of pattern. Peak E in the daily at 19.75 on the 4th of September. A peak E, I haven't put in a down arrow. Even the price is really warrants a down arrow. I just want to give it another couple of days because that MACD is really strong. Stochastic is down to 71% and it's still above the 200-period moving average of support in the continuous contract of 17.53. Now let's look at high-grade copper. High-grade copper has been, don't type it there. Type it right here. High-grade copper at HG, continuous contract, pulling back much sharper. It's given back the gains of 3 days ago. I think copper is going to have to wait. It just looks to me like it has to wait. I want you to look at the RTH. I was asked, could I look at the RTH? That is the retail. This is the Van Eck retail index, and it made a peak F in the Chapman wave. I'm putting a question mark here. I don't know whether to put a down arrow yet. But it had a high just under 118, came from 104s. Hey, that is pretty good. 14 points was a 12, 13%. And I'm going to keep calling this a leg C. I don't see any reason why not to change, why it should change. Now, this is the one, and I'm calling it a G/C in the, that's the call that I needed to hear. All right, doesn't matter. I'll call them back in a little while. So what we're looking at is in the monthly chart, G/C. I still think that's a C. I'm going to call it a C for now. But if you look at the XRT, now that was would I show a comparison? Sure can show a comparison if I type it in the right place, right there. XRT is the S&P Select Retail ETF. It made a peak D. Remember, Chapman wave, we're always looking for those Ds, and it has a pretty, considering what it's just done, this is a pretty sharp pullback in the, there we go. Okay. Okay, we've got a break coming up. The XRT, I just typed it in. So, under the 200-period exponential moving average. This is not as good because it doesn't have Amazon. I'll be back. Basil Chapman, Tiger Conditions Hour, Dow's down 43, S&P's unchanged.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back, and I had a question about a stock that I looked at the other day for one of our dinners, 44.69, today's high. So this is a leg V. Yes. So what we were looking at is Sinclair Broadcasting. It's a company that had a spectacular move up until about probably May of this year, and then it just took a dive. So it went from the 66s down to the 41 area. I'd say, 30% decline is a decline. Okay, and then it gets stuck. And I'd said that we looked at this the other day, and I said my biggest problem with this stock is that there's a good chance that this rectangle formation, I have an expression that says a rectangle formation can last a lot longer than your patience, and that every time it gets to the upper part of the trading band, that's where you think it's going to break out. No, the rectangle says that's very strong resistance. It's a repellent line. It pulls back, and it goes to the bottom. It's just done this 1, 2, 3, 4, about 5 times. It's come back, not exactly to the trend line, but it's come back from the upper range. So now it's looking quite good. It's up 26 cents at 44.72 SBGI. And now the question is, would you initiate a purchase of SBGI, Sinclair Broadcasting? And this is a person who looks at a longer term at the charts. And I'm going to suggest that I like the way the technicals have moved. And if you look at percentage gains, a 5% gain from the 42s to the 44s, it really isn't very much when you've had such a spectacular move with the stochastic going from the teens to 68, and that's all you've gotten. So this could be the very moment that it's going to break out. So I know that you're prepared to take a little bit of a risk if it's a long-term position that has the potential to really garner 12 or 15%. So I'm going to say that normally I would, if someone just asked me point blank, what would you do? Would you buy? I said I'd have to wait. I'd have to actually wait for a breakout to the 45.5, 46.30 area. And then the next pullback, if the technicals are still holding well, because it's broken the big resistance level, that's where I'd initiate a buy. But that's like 1.5 points, 2 points higher, 4%, 3%. I'm going to suggest that this person takes a position right now at 44.71, and I'd have a time constraint. I'd say within 3 days, if it hasn't taken out, I'm going to be a little generous with this one. If it hasn't taken out the open of 43.80, I'm going to give it even more room. I'm going to actually say the low of 43.20. That's a little bigger than normally I would take for in a percentage, but for a starter position right here at 44.69. And in this case, I'd have a stop underneath 1 or 2 pennies underneath the low of the 16th. That's yesterday. Reason being that if it takes it out, it's just going right back and it's stuck in the range, and it can keep going in that range. If it does that one more time, this range can be taken at least for another week, and there's a chance even that it could take out the 42 low. It's actually just under 42, but this is the chance, because if it's able to close at the high of the day today, 44.70 right now, 44.71, high was 44.90. If it closes anywhere 44.88 or higher, I think that this can then start to tackle the next big resistance, which is the high of the 30th of August, 45.42. So in your case, I am going to say yes. Normally I would say no, let's hold on, but I'm going to do that here because there are 2 big green candles. It hasn't had 2, because usually when it has 2 green candles, it has a third one. So that gives you a little opportunity to raise your stop. I'm not even telling you to raise your stop in this particular instance. Let's be in touch again tomorrow or the next day. Just ask the question, what about SPGI? And I'll try to answer it. But I'm saying 44.70, start your engines. Okay. The weekly chart needs a lot of work, but I can tell you this. The moment it goes into the 46.60, 47.30 area, that weekly chart will start to improve. It has to do it. I don't know if it's going to do it. I'm just saying this is the best opportunity because it gives you a leg up to get in towards within 2 points or so of the low, 2.5 points. But at the same time, it gives you a little flexibility because, as I say, I'm thinking time because within 2 days, it should be back underneath 43.30, the way it normally acts. So if this strength in the technicals, the daily technicals, is improving, and let me just see. Yes, the weekly chart says, so the 120-minute chart says this could be a move that takes it to, this is, peak A, B, restart, A, B, C. This is in leg D, but it's a complex D. Oh, everything applies. I'm not changing anything. Everything applies. I'd say this is the moment it should pull back, because if it doesn't pull back, that's its first real sign of follow-through strength, but only if it can get into the 45s within a day or so. All right, we did that. Dow's down 52, S&P's down 1.5. A couple of things I wanted to talk about. Yeah, so no, I'll do this. Hector wants to know JCP. So that JCP is JCPenney, I believe. Yep, there it is. So now this is going to be very interesting. For subscribers, I featured a stock today that's in the JCPenney category. What do I mean by that? It was a stock that had a huge move up at one point. It was the favorite stock. It was beauty care, had a wonderful, wonderful move. And then it went from the 43s to the 1s. All of a sudden, I've got a thing that I call the screamers. These are the stocks I've been featuring for the last 2 weeks. They're in the absolute single digits, and then they have day after day of green candles. What do you do? How do you do it? I decided with this particular one that I'd skip a day. Let's see if it does pull back, but it is in the screamer category. Just 5 days ago, JCPenney was in the screamer category. Why? Because the darn thing plummets all the way from the let me get out of this 120-minute chart. Look, it plummets all the way from the, let me squeeze this. There we go. JCPenney, once upon a time, just was in the 12s, and then it plummets down to the point. This is, folks, listen, $12 to 53 cents on the 18th. And then what does it do? It kind of struggles a little bit, 0.53. It struggles a little bit, and then it double bottoms, triple bottoms actually, and then takes off. And then it goes into screamer mode right there. Look at this. On the 9th of September, has a low of 78 cents. Gaps up the next day. It closes at 85. Next day it opens at 86 cents, goes to 102, gaps up the next day, and goes all the way to 1.26. I would say 0.53. Let's call it 0.60 to 1.26. That's a big move. Okay, so now it's giving it back. So Hector, I'll be doing this in a moment. Hold on. The Dow's now down 60 points. S&P's down 1 3/4.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back, and the market is in that digestive phase that we were talking about last Thursday. I said I believe that we're going to go, actually all of last week. I was saying I think we're going to go into a digestive phase. We're waiting for that PD. It went to an E in the Dow, and now we're in this digestive phase. Digestive phase implies that there could be a couple of moves to the upside still, and that we're really in a trading band. That's kind of the way I'm looking at it at this particular point. So we're looking at JCPenney at 0.87, down 7 cents. That's a big percentage, 7.7%. These are big percentages when you're talking about less than single digits. You're talking about, point under dollar, 0.87. It went to $1.20. Did I say 26? $1.20. Yeah, 6 on the 11th. And now it's $1.26 to 87 cents. Imagine if you were buying it up in the 115, 118 area. Now it's at 87. That's big. It's like $11 to $8. So think of it that way. I'm going to suggest, Hector, that I'm not going to suggest that you nibble right here at 0.87. Well, let me do two things. I'll give you a scenario that immediately came to mind as I looked at it. The MACD is very strong, but it's making that Lamar type. Any of you know the racetrack Lamar? It's got the sharp hairpin bend, and it's made that hairpin bend, but it's not even close to turning underneath negative. The green line, 9-period differential under the 26-period slow-moving average, the red one. But the stochastic has gone from the 90-something percent, about 93%, to 65%. It's going to take a little bit to get it back again. So the medium, and it's got a peak D in the Chapman wave. In fact, I'm going to do it. Yeah, I'm going to do it right now. I'm going to put a down arrow because that's what I normally do. Even though the MACD hasn't turned down, everything else is still very negative. So on a short-term basis, it's gotten to a sell mode. My thinking immediately was, hey, Hector, why didn't you do this? Have a little patience. You want to see an inside bar tomorrow. That means it's lower than today. It's higher than today's low, but maybe it's quite a bit lower than today's high of 0.97. But it is above, let's just say 0.84 is in fact the low of the day. I don't know, the day's not finished. You want an inside bar, so higher than that tomorrow. And then the third day, second day, so this is today's action, right? So you're going to have to wait today. Then you'd have to wait tomorrow for an inside bar. You don't want a lower low. A lower low is just a big, not good, especially with that weekly chart under the 14-period moving average. But if tomorrow there's an inside day, and then the third day, Thursday, so there's 3 days including today, Thursday is an up session, possibly still not taking out the high of 0.97, but maybe taking it out by 2 cents. That's when I would say to you, now you've got a little bit of a chance, a better chance that the stochastic's going to rally and the MACD is holding well, and you're going to make an M-shaped formation in the MACD, daily MACD, because the weekly chart is improving quite a lot, and you saw that in the price. Yeah, you did see a commensurate move up in the technicals with the price. So what I would say to you is, either you can get in right now at 0.86, 88, 87, just anywhere around there, just a little bit of a position so that you're really following it much more closely than if you don't have it. My preference would be to hold it, not do anything yet, wait until tomorrow, and you want an inside bar, and then Thursday, if it's actually starting to rally, that's when you can start. So you're not going to get 0.88. You might have to pay 0.94 or 98. So that's 9 cents. So now I'm saying to myself, wait a minute, if you're going to take a 9-cent risk, you may as well do a little nibble here and say 78.78 or 76 is going to be my stop. I find that a little more risky because it's in 4 red candles. The best you can expect is tomorrow to be a kind of a doji small candle inside bar. But if it closes down today and gaps down tomorrow, that's going to be hard to make up. How are you going to make up going back to 1.20 if it's so? No, I'm sticking with my plan. My plan is hold off. If you want just a nibble because you want to really get a feel for a 0.88 stock nibble, what do you buy now for 88 cents? Do you buy 100? Do you buy 1,000? I'm going to say you have to decide what your risk is. But if you're going to nibble, just get like a little handful. So it's not going to make any difference if it goes down, but it's not going to make any difference if it goes up either. But it's giving you a real feel for the market. The Dow being down 47, the S&P holding much better, down only 1. And yes, your stock down 7%, 0.07. How does it act with the market? If the market comes back by the end of the day, there's a chance to do that. Will this stock come back to the 0.92? This is JCP. So you can take a little nibble here, but you got to have a really, I'd have a stop in it, because if this starts to take out 0.80, it can give back everything, because this is a really badly run company. Look at the monthly. So anything that's turning now is more, I don't know if about short covering on a 0.60 something stock, but it's got the characteristic of short covering. In other words, someone thought, oh, well, maybe now it can move. They made a great profit if they got in at 0.60 and it went to, they doubled their money. Now, are you going to be able to do that? I just think you're going to have to wait. Wait, that's what I'm going to say. Hector, wait, we'll deal with it again in another day or two. All right, next question I had was, where did it go? Oh, Boeing. Yeah, Boeing is, in fact, up a little bit. It's up 230 at 381. Remember, I said Boeing's acting way better than you would expect. When it's completed, the Chapman wave beak formation in the Chapman wave stalk leg, there's the monthly leg, oval body, neck, beak. Remember, it doesn't have a head, it has a beak. And the beak comes straight down. Beak has held, didn't go below the body. It's still in the middle of the body, and now it's going towards the upper part. Maybe Boeing is done on the short side, on the sell side, and at least for now is going to have a bit of a rally, because when the Chapman wave stalk leg formation is completed and the beak stops and turns around, it usually has a really good rally, and then you're on your own. That's the rule of thumb. So it's holding well. I am anticipating there's going to be an attempt, like many stocks have made a peak C. Our stock we are long, that we replaced the United Technologies that we got stopped out of. We went right into Caterpillar, had a bit of an early pullback. Now it's coming back a bit at peak C. A lot of stocks and even a couple of indexes like the IWM are at peak C and need. In the Chapman wave methodology, they almost always do go to a D. So that should still happen at some point. You've got options expiration coming up Friday. There's a lot going on, and I have a lot of information here that says the fact that yesterday with the oil crisis, the market didn't plunge 350 points in the Dow, 40 points in the S&P. It says that things are looking a little better than people would expect. But at the same time, I think that this digestive phase is going to continue a little while longer. So maybe Thursday, day before options expiration, maybe you get a big move up. And then Friday, because of options expiration and whatever the Fed does, you get a move down, whatever it is. Maybe we mix them up. But I am looking at range bound with a couple of real volatile days coming up. Okay, so with that said, where was I? I was talking, peak C. Yes, so this says to me, I'm looking at the stock that I decided not to buy this morning, a screamer, and it's up almost 1%. You know, you do your best you can. All right, I'll be back. A stronger Japan yen is good for small cap Japan companies, JOF. All right, I'll look at that when we get back. Basil Chapman Dow's up, down 54.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
Tom O'Brien will be hosting a special 60-minute live webinar Wednesday night for Gold Report subscribers titled The Next Leg Up in Gold is $1,794. Find out why. In this 60-minute webinar, Tom will be discussing how the bond market moves the gold market, where the gold demand trends are coming from, how gold outperforms fiat currencies over time, how gold trades an average of $110 billion a day in value, along with many more topics. Subscribers to the Gold Report just closed out 3 positions in the last week for profits of 28%, 35%, and 51%. Now is a great time to sign up for the Gold Report. You don't want to miss out on the next big run in gold and gold equities. Sign up now for the Gold Report by visiting the front page of TFNN.com and get ready for Wednesday's live webinar with Tom O'Brien. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, and here we go. IYT. IYT is the transportation index, down 191.94. XAL, airline index, up only 19 cents at 98.85. Interesting, because yesterday the airline index got clobbered, big red candle, but it's had a fabulous move from the 89s all the way to the 102s. Now at 98, digesting the gains. We'll see, because it's very important. If the crude oil, let me go back to crude oil. If the crude oil stays in the 58.5 to a higher area, that's suggesting, yeah, maybe some of it was resolved, but there's still an issue. And that issue suggests that the higher crude oil prices might even have a little bit of an effect on the Fed. The TLT right now is trading up $1.04 at 139.31. If the Fed starts to perceive, and I have no choice, but I have to put a down arrow, meaning sell signal. I have to wait for the end of the week, but it's a sell signal at least in the daily. In the weekly chart, it's sell mode in the daily. TLT, Lehman 20-year Treasury bond ETF, 139.36, up $1.08. But let's see what happens, because if the Fed starts to see the chance that if crude oil remains high, and it's not that high, but high in this area, maybe it'll impact the profit margins of the companies and investments, etc. So maybe the Fed is going to lower the rates, and maybe the market will be satisfied, but maybe not satisfied enough. But in the meantime, the overall bond area, let me now go to continuous contract of the bonds of 25, 30 seconds at 159, 23, 30 seconds. 165 and 25 seconds was the continuous contract high, double top, pulls back down to the 157s. That's a big pullback, a huge run up. This is just a good digestive phase, and that can last a little longer. That's the way I'm looking at it. So yeah, maybe the rates, maybe the Fed does something, and then the market says, were they forced to do that? Let's look at the IYR. IYR is having a really nice bounce, rebounding up 66 cents at 93.14. Made an all-time high. Peak B, leg B in the monthly. Peak F, maybe there's an alternate count, but I'm calling it F for now in the weekly. And F/B, I'm calling it F for now in the on the 4th of September at 94.20 in the daily. This is a good rebound. If it takes out 94.30, that means that the REITs are still in play. It means that no matter what happens, you have to consider that the sectors that ran up are still strong. That implies also that we've got to look at the semis again. The semiconductor is holding very nicely here. Yeah, it could easily have, as I say, had this email saying, have a look at this, and that was a newsletter from Public Information. And I think that, yeah, they're definitely starting to see some improvements. You can see that. Just missed an all-time high 4 days ago. All-time high is 123.56, and this went to 123.13. Let me put that in. And we've seen that 123.13. We've seen that quite often now, where stocks have had a V-shaped pattern, and then they've come back. In some cases, monthly charts have come back to within pennies of the left side high. So that is the pattern du jour. Remember, I like to look at patterns and say, it's fascinating over the years for me to see a pattern that was very successful in one sector, in a completely different sector has the same pattern. Hey, let me show you an example. Look, here's gold. Where did it go? Here's gold, if I can find the right, click right there, at GC. So here's gold. Look at that pattern. It went to, it had a fabulous move up, and very unusual. Look at this, it's the dollar. Same, almost the same kind of pattern. Very seldom do you see them going in the same direction. But I had said that you've got to consider that yields, gold, and the dollar must be thought of as three separate entities, even though sometimes the two of them can go together, or maybe three even together. But very often, over the decades, not the years, but the decades, gold and the dollar have actually moved in counterpoint, not in a mirror image percentage, just in direction. One goes up, the other goes down a little bit. Okay, so the semiconductors must be considered a very key, at a key inflection point right now. If the semi's trading at 120, let me just double check, 120.89 in September, close even one day in the 125.75 area, that's going to be really important. And it does two things. It pushes it into the upper level of this rising Chapman wave inside track repellent zone. Remember the technique that I have right there? And that has resistance at 125.32. So it pushes it, 125.75 pushes it over there, especially a close above that, especially in the 126s, then it's free and clear, and turns the whole 120 into 118 area as key major support for the semiconductors. So let's see how that works out. The VIX index. Yeah, okay, I'll have a look at the VIX index. VIX index trading right now is at 14.81. It's up 14 cents. It's just not showing strength at all. And if the VIX at any time starts to trade in the 16s to 17s, you'll see selling pressure in the marketplace. Slipping into the 13s says, oh, there's going to be more buying. And just think of it as simply as that. Question I had about these screamers. Do I see anything? Yeah, AR has come up on the screen. AR is, in fact, what is it? Artero Resources Corporation. It's gone to a leg B and extended that B. Oh, okay, so maybe this is in the gold area. A, B, C, and there's your D. Always looking for the fourth highest peak D. So it's in a buy mode. Weekly had looked absolutely impossibly terrible. Just kept like working its way down, treating the pink 9-period exponential moving average as it couldn't even get there. But what a repellent. And now all of a sudden it's taken it out. And this is the first week it's trading between the 9 pink and the black 14-period moving averages. So yeah, this is a screamer up, and so far technique says, the technicals say that the daily is still very strong. Weekly is improving, and the monthly says, that doesn't look good at all. That's an expression, a technical expression you'll find on page 5 under Y. Okay, that's AR trading at 4.29 down 2 pennies, but it made a new recovery high. Oh, XLE question was, is that a peak D? Yes, so far it's a peak D because there's no new high today, recovery high. It did beautiful. It went with in a cup formation, did everything else. I did the analysis like I did with a number of stocks over the last week or so, absolutely excellently. But we didn't get in. We have got some, and they've done very nicely. But no, this one didn't work. We didn't get in. It gapped away, and I just didn't want to chase it. But that was dumb because it looked like the technicals were strong enough that even if it gapped away, I'd have a cushion. I'd have to widen the stop, which is kind of what I didn't want to do. So anyway, that's the way it is. We've got one more segment coming up. Basil Chapman, Tigers.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we Tigers and Tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, you got Steve coming up. I see Steve warming up in the den there. And, of course, he did Larry's show this morning. Thank you, Steve. And we've got Dave White coming up straight after Steve. And then Tom O'Brien. I'll be back with Tom later this afternoon. Check out my opening call, my daily newsletter. We've had some real nice positions there. And we've still got long positions and no shorts just yet. So far, things are still looking good. So GBTC is Bitcoin is trading at 1261, up 36. 0.36 up 2.91%. Yeah, I don't see anything yet. This is the first sign that it's trying to rally. It's had strong technicals, yet the price hasn't moved very much at all. I would suggest that over 13, it starts to push towards the upper end of the range in the 1350s. A close in the just over 13 and a close under 12 suggests it's going to test the lower range of 1150 again. And the monthly chart, the weekly chart just says sideways, lower lows, lower highs. It's got to prove itself. Hasn't done that yet. The next question I had was, whoops, where did it go to? Let me just get to it. Give me a second. Right there. Yes. Next question. So JWN. JWN is, what was the question? JWN. Yes. So JWN is another one of those retailers, and it's had a very strong move going from the 25s to the 35s. Very strong down day today, down 350. Just be careful with these retail stocks. I think most of them have had their run to the upside. Just be careful, that's all. So before we're about to wrap up, let me just do a couple of things here. One is, if I got the time, let me just do this right. I think this is it. Nope, that's not it. Oh, come on. Come on. Okay, there you are. So using that technique that I've had for so long, we did want to short on Thursday. We just missed it. That would have been the same kind of sell signal that we had at the exact day of the high of July the 15th, July 16th, and the same in April. I think there's going to be another chance. I think there's going to be a bounce, and the rollover is going to take until maybe Friday or early next week, and then we start to test some of the lower levels. It's going to have to take a breakout into the 27,500s in the Dow to really see a breakout, and I just think we need time to do that. Have a wonderful day. See you later with Tom, otherwise tomorrow, and good trade. Thanks for